All right, let's get right into it. The market right now is sending some of the most confusing signals I have ever seen. We're getting monumentally good news, but the mood out there, well, it's anything but cheerful. So let's try and make sense of this good news, bad vibe paradox. Okay, so check this out. On one side, you've got two historic, fundamentally bullish events happening. The US government is back online, and the very first spot XRP ETF has officially launched. Huge, right? But on the other side, the market is just gripped by what you can only call extreme fear. Bitcoin is struggling to even hold its ground. It's a classic battle between the hard facts and how everyone is feeling. So, what is the real story here? I mean, why is all this incredibly positive news just getting lost in a sea of fear? Let's dig in and figure out what's really happening behind the scenes to cause this massive disconnect. To really get what's going on, you have to understand just how significant these positive developments are. We're not talking about small wins here. These are two landmark events that, in any normal market, would probably send prices absolutely soaring. First up, after a record 43-day shutdown that basically put a freeze on everything, President Trump has signed a funding bill. Federal operations are back up and running. And look, this is way more than just a political headline. It has direct and immediate consequences for the entire crypto space. The reopening removes this huge cloud of systemic risk that's been hanging over the market. What's crucial here is that it means the SEC and the CFTC are back at their desks. This clears the path for delayed crypto ETF approvals and gets key legislation, bills on stablecoins and market structure, back on the table. It's a massive step towards getting some much-needed regulatory clarity. And then just as that news was breaking, we got this bombshell. NASDAQ has officially certified Canary Capital's spot XRP ETF. It started trading today, and it gave XRP a nice little price bump. This is a huge milestone, really. It sets a precedent for other altcoin ETFs to potentially follow suit down the line. But here's the catch. Despite that groundbreaking XRP ETF launch, the net flow for all crypto ETFs over the last 24 hours was negative, to the tune of $461.8 million. This just screams that right now, institutional demand isn't there. The big money is sitting on the sidelines, watching. So how do we explain all this fear? Why are institutions so hesitant when the fundamental news looks this good? Let's decode the data that's really driving the market psychology right now. The most direct way to measure how the market is feeling is the Crypto Fear and Greed Index. And right now, it's sitting at a rock bottom 15 out of 100. That's not just fear, that's extreme fear. A level like this indicates widespread panic and a ton of worry among investors. And you can see that fear reflected directly in the price of Bitcoin. It's struggling just to stay above that $103,000 level, especially after a massive liquidation event recently wiped $610 million from the market. An event like that, it spooks everyone and really keeps prices pushed down. But here's the other way to look at it, the contrarian take. As the people who made the index themselves point out, extreme fear can be a powerful counterindicator. When everyone is this worried, it often signals that the market is way oversold. And historically, these exact moments have been prime buying opportunities for investors with a long-term view. So, if money is flowing out of major assets and institutional products, where is it actually going? In a fearful market, capital doesn't just vanish, it rotates. Let's follow the trail and see which sectors are actually benefiting from all this anxiety. One of the clearest trends we're seeing right now is a rotation into privacy-focused coins. It makes sense, right? As traders start to think that the government reopening will lead to tighter regulations and more oversight, the demand for anonymous transactions just spikes. Zcash is the perfect example here. It jumped over 4% as institutional interest seems to be growing, and this trend towards self-custody really accelerates. People are moving their assets off exchanges, and when they do, a lot of them are looking for privacy. Okay, but a quick word of caution is definitely needed here. While we see capital flowing into these riskier niches, the dangers are very, very real. The recent $4.9 million bad debt event on the decentralized exchange Hyperliquid, which was caused by market manipulation, is a really stark reminder. It just proves you have to be incredibly careful with high leverage, especially on these smaller platforms. So with all these conflicting signals, you've got bullish fundamentals, bearish sentiment, and these risky capital rotations. How in the world do you navigate this battlefield? Let's talk strategy. Let's just zoom out for a second. According to one Fidelity analyst, this wild volatility isn't a bug, it's a feature. They argue the bull cycle is entering its final acceleration phase, which is always characterized by exactly this kind of increased chop and uncertainty right before the next major leg up. In an environment this chaotic, you need a disciplined, hard strategy. That really means 4 things. First, reduce your position sizes to manage your risk. Second, avoid high leverage at all costs. The hyperliquid incident showed us exactly why. Third, don't FOMO into the XRP ETF. Wait for the real net flow data to come in. And finally, focus on the core, most liquid assets like Bitcoin and Ethereum. Now, looking ahead to tomorrow, November 14th, there are 2 data points that are going to be absolutely critical to watch. First, we'll get the first day of net flow data for the new XRP ETF. This will be our first real measure of institutional demand for an altcoin ETF. And second is the US CPI inflation report. A soft number there could give the Fed room to cut rates, which would remove the single biggest macro risk hanging over this market. And that leaves us with one final thought. The market clearly has this massive wall of fear to climb. The good news is there, but the feeling just isn't. So I'll leave you with this question. What do you believe is the single biggest hurdle for Bitcoin to overcome to finally break free from this fear and reflect its real fundamentals? Let us know what you think in the comments.